Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices. After having kind of a modest week trade, we end on the lower end of the weekly range, likely ahead of FOMC. We're seeing a little bit of position squaring. The market really didn't see a whole lot of fanfare like we have over the last, say, 2 to 3 weeks. With the market seeing higher highs and lower lows, we kind of just saw one of those weeks where we waited for something to happen. We were positioning for something future and ahead, and we didn't really see a whole lot of reaction. All that being said, gold's still within that range where it's in neutral territory. We talked about the level north of 1300 and I think below 1330. Those were the levels that we need to stay below in order to kind of remain in what if territory, and we are. And if you look at the dollar over the week, yeah, the dollar did see a bit of a bid. I'm not saying that the dollar is strong. I'm not even saying that it's at the beginning of a trend. It's just nudging higher. Obviously, with the Fed expected to raise rates next week and with policy leaning towards being a little more hawkish, likewise with some of the auctions behind us, at least for this week, we saw the dollar start to get a little bit of a bid. It may have been a factor of whether you look at Europe or whether you look at Asia as well. And I think that the dollar gaining a little bit of strength is good, but let's see that over a sustained period. We've seen the dollar in a pretty tight range, very near the lows still, despite the fact that things may be getting a little better here. We'll have to wait and see. A big key to the puzzle here is going to be how the Fed's forward guidance is interpreted with the lower growth numbers that are being put out over the last week or so. So the dollar right now a little bit higher, but I wouldn't necessarily call it a shift. And lastly, let's look at those positionings in gold. Gold has seen positioner spec longs hold on for dear glory. They did get out on the last down trade. I think they're getting out again this week with the idea that maybe FOMC might not be their friend. I think that when you look at growth numbers that are struggling in the U.S. as well as a flatter Treasury curve, uncertainty is probably near its highest it's been in a long time. And it's not so much that the Fed won't react, it's how will they react. The new Fed chair sitting at the head of the table for his first meeting. I think that gold owners, spec longs, are probably a little bit nervous and maybe think they can buy on a dip if we get down to 1300 or dare I say below it. So I think right now the speculators are the ones who are sort of pushing the market down. That's why we're not seeing a big move, but just these modest lower pushes towards the low of the week. We'll have to wait and see. The big day next week is going to be Wednesday with the Fed, and obviously that will basically tell the tale for the next several weeks, if not longer, as to policy and how hawkish or dovish or how some of the numbers are being interpreted and where that'll push the dollar and ultimately where gold will trade, because right now gold is still in neutral territory. A trade below 1300, look out below, and a trade above 1330 I don't think races us higher, but certainly sets us up for a more bullish stance and bullish outlook on gold. Heading into the weekend, this is Todd Colvin coming to you from the floor of the CME Group.